Today we're going to learn about construction cash flow. Cash flow. Cash flow is defined as the movement of cash in or out of a business. In a construction project, the cash flow will be exchanges of payment from the owner to the GC and payment from the GC to suppliers, subs, and themselves. To further explain this, we'll use an example of a $10,000 construction project on the Auburn University campus. Here we will use a simple chart to better analyze the cash flow. On the vertical axis, we will track the amount of money, whether it be in or out, and then on the bottom axis, we will track the time. This project will take approximately 4 months to complete. One thing to point out about construction projects is that the construction process is not linear in terms of production. It's typically slower early on when they're working out of the ground, and then it picks up pace in the middle of the project, and then it kind of levels off towards the end. This causes an S-curve. This differing amount of production will affect the amount of money that the GC receives from the owner each month. Here we have the three main parties of a construction project. We have the owner, Auburn University, represented by the Auburn hard hat located right here. We have the general contractor, represented by the hard hat in the middle. Then we have the subcontractors and material providers for the project, located by the tool bag and hammer here. The project is valued at $10,000, represented by the money located right here in the front left corner of your screen. Here we return to our chart. During the first month of construction, the GC will spend money on materials and self-performed work, represented by this pink line being drawn here. At the end of the first month, the GC is given 80% of the value of work performed. The remaining 20% is retained by the owner as insurance. With the project being 20% complete, the general contractor is owed 20% of the value of the project, or in this case, $2,000. As we mentioned before, the owner will then retain 20% of the value of each payment as an insurance policy against work getting completed or any mistakes on the site. So as you can demonstrate here, the owner will keep $400 of the value owed to the GC and will give the remaining $1,600 to the general contractor for work rendered. After the GC has received his payment after the first month, he will then get ready to pay his subcontractors, usually 2 weeks after he receives his money. In this case, again, the GC will keep usually about 10% of what's owed the GCs as insurance and will only pay them 90% of what they've earned for the project thus far. This is demonstrated here as the subs and material providers are owed $1,600, but the GC will hold on to $150 or 10% and give them the remaining $1,450 for their work rendered and materials provided. The following month, expenses are additionally incurred for construction, and then the GC is paid at the end of the month for 20% more. So once again, during the second month, 20% of the project is completed, or $2,000 is earned for the GC. As in the previous month, the owner will then retain 20% or $400 for himself as an insurance policy, and then will pay the remaining $1,600 to the GC for services rendered. Now we'll explore different areas of time during the process where, shaded in pink, the GC has spent more money than they have received, or negative cash flow, and then there are areas of time shaded in green where they have received more money than they've actually spent thus far. Areas in pink are areas where they need to either borrow money or pull money from their cash reserves to cover expenses. Additionally, the GC will now pay out money to the subcontractors and material providers represented by the vertical pink line here. Once again, with 20% of the work completed, additionally, the subs are entitled to $1,600, but the GC will hold on to 10% or $150, and giving them $1,450. During the third month, we reach the more vertical part of the S-curve, accomplishing 40% of the work value for the project. As represented by the vertical line here, this is the largest month of productivity. So once again, the GC has completed another 40% of the project, or $4,000. The owner will keep the $800 of retainage for himself, and then will give the remaining $3,200 to the general contractor for services rendered. Then once again, in previous months, the GC will pay to his subs their portion of the income, which in this case is $3,200, and then the GC will hold on to 10% or $320 and give the remaining amount to the subs for their work. So here in the fourth month, the project finishes up. You can see the pink line showing costs going out, and the vertical green line will be the payment to the GC for the $10,000 minus the retainage. So with the project complete, the GC is paid for the final 20% of the project, which in this case is once again $2,000, with the owner keeping $400 as retainage and the rest of the money going to the general contractor for his work. Here the GC pays the subcontractors for the 20% of the work complete, keeping 10% for himself, which means all that will be owed the subs after this point is the remaining retainage. 1 month after completion, the GC is paid the retainage, or $2,000 from the owner. Here we have the owner giving the remaining $2,000 to the general contractor as his retainage, as all work has been satisfactorily complete. Once again, 2 weeks after the GC has received payment from the owner, he will then pay his subcontractors their retainage that he has held, or 10%, represented by the pink line here. Now, what you'll see is an area where the pink line is now finally below the green line. The space in between represents the actual earnings the GC made, or profit that he made from the project. In this case, for $10,000, he received a 5% profit, or $500, on the cumulative total of the $10,000 project. So as you can see, the GC, for all the money that changes hand, actually retains a reasonably small amount of money once the project has become complete. Finally, here we will see the general contractor with the retainage in front of him. He'll keep the $500 that he earned in profit and will give the remaining amount to his suppliers and subcontractors for services and materials.